Welcome to the Lend Academy podcast, episode number 164. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Support for Lend Academy comes from Wonder Capital, the easiest way to invest in large-scale solar energy projects across the US. With Wonder, you can earn up to 7.5% annually while helping to finance renewable energy projects. Get started at wondercapital.com/lendacademy. Wonder Capital, where impact investing meets capitalism. We have a special guest on today's show. I'm delighted to welcome Michael Schlein. He is the president and CEO of Accion. Now, Accion has been around for several decades. Many of us have heard of them, but I think there's not that many people that really understand all the different facets of what they do. I know I didn't. And so I wanted to get Michael on the show just to go through all the different pieces. And we talk about that in some depth. We also talk about the work they're doing in the US. We talk about the work they're doing internationally, what the impact of mobile phones is having on the work they're doing. And we talk about governments, what governments need to do, and what really needs to happen to move the needle for financial inclusion. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Michael.
I'm delighted to be here.
Okay, so I'd like to get these things started by giving the listeners a little bit of background about yourself. You've had an interesting career to date, so why don't you touch on some of the highlights for the listeners?
Sure. I went to MIT grad and undergrad and then went into investment banking for a couple of years, doing public finance at what was a small investment bank called Smith Barney. And then I left to go do politics and government for a dozen years. I worked I was the finance director for a presidential campaign, and then I got involved in New York City government, where I worked in the last year of the Koch administration and the 4 years of the Dinkins administration, where I ended up being chief of staff to the deputy mayor for finance and economic development. And then I went into the federal government and became chief of staff at the United States Securities and Exchange Commission, where I had the chance to work with Arthur Levitt in the Clinton years. And then I came back to New York and went back to what was still a small investment bank called Smith Barney, right at the time that Smith Barney, shortly after that, I went to work for Jamie Dimon and Sandy Weil, and right then, shortly after I came back, we acquired Salomon Brothers and our parent Travelers Company. Travelers bought Citigroup, and Citibank, and Citigroup was created, and so I quickly became part of the Citigroup empire and had a great run for a dozen years or so, where I had the chance to run internal and external communications, philanthropy, government relations, branding, something called business practices, human resources, and then my last role at Citi was I managed the network of the 100 chief country officers around the world, which was really quite an extraordinary opportunity. And then I had the chance, during those years, I was asked to serve on the board of Accion, and at a moment in time when Obama got elected, my predecessor as the CEO of Accion went into the Obama administration. Maria Otero became a deputy secretary of state. And one thing led to another, and I was selected to become the CEO of Accion, which is where I've been now for the last just short of a decade.
Mm-hmm. Well, that is an interesting career so far. You've worked with some of the biggest names in finance, it seems, over the last couple of decades.
Yes, I really have had I do view it as a great fortune to have worked very closely with Jamie Dimon, Bob Rubin, Sandy Weil, John Reed, Ajay Banga, Chuck Prince, and of course Mayor Dinkins, Mayor Koch. So I feel like I've had a chance to work with some really great visionary leaders, managers, and along the way you learn things and you see things you admire, and also at a place like Citigroup, I saw some great managers, and I saw some managers that were not so great.
Right.
And you learn along the way. And of course, later when you're in charge, you get a chance to say, okay, what kind of manager do you want to be?
Right. Okay, so let's turn our attention to Accion. And I know your organization has been around for decades, so maybe just give us a little bit of the history and the mission of what Accion is trying to accomplish?
Well, first, let me go to the mission. We're trying to create a financially inclusive world. What does that mean? That means where everyone has the financial tools they need to manage their day-to-day lives, protect themselves in a crisis, and take advantage of opportunities when they come around. And most of your listeners can take for granted, as do I. We take for granted a global financial system that works pretty well, where we all have credit cards in our pockets and ATM cards and ATMs on every corner and appropriately priced insurance, and you can get a loan to buy a home or to finance your education or to build your business. And think about this one, for the most part, you get your income on a monthly basis and your bills come due on a monthly basis. Mm-hmm. And all of that is very, very convenient, and you can and you should take that for granted. But for 3 billion people, they have none of that, and the global financial system for them is a complete failure. They are invisible to it, and it may as well not exist. They don't see it. It does not recognize them, and we need to change that. And their lives are so much harder because of that. So, for example, a typical person living in poverty would be a woman farmer, let's say in rural India. She gets paid one time a year, maybe twice, but usually one time a year at the time of the harvest. And she has to make that money work all year long, and yet she lacks a safe place to save. Just think about that phrase, mm-hmm. A safe place to save. Again, we take that for granted, but she doesn't have that. She can't get insurance, so she's subject to droughts and floods and natural disasters. No one would lend to her, and her life is so much harder because of all that, and we today have the tools to change that. So let me tell you a little bit more of the history of Accion. We started in 1961, largely as a private sector Peace Corps, which was quite extraordinary because the Peace Corps had not yet been created. In fact, our founder went on to run the Peace Corps later in the 1970s in the Nixon administration. And we spent about a dozen years doing community development, first in Venezuela and then in throughout Latin America. And in the early 70s, 1972, we said our clients need more than community development, they need capital. So we started experimenting, making very small loans to the poor. We were doing it in Brazil. Dr. Mohammed Yunus was doing it in Bangladesh. Others were doing it in Southeast Asia. And we all discovered that the poor could repay small loans 97% of the time, a statistic that has really held up over decades. And so Accion built a string of nonprofits in almost every Latin American country to make small loans to the poor. And we helped them grow, and we helped them raise money, and we helped them build their methodology and get to greater scale. And in 1992, in what was a controversial event then and now sort of an obvious in retrospect, Accion helped create the world's first for-profit bank for the poor, Banco Sol in Bolivia. Up until 1992, around the whole world, microcredit, microfinance was done by nonprofits. And after 1992, this commercial model really took off because once you could tap the capital markets, you could tap the equity markets, you could tap the debt markets, you could hire talent in a different way, you were regulated in a different way. Later on, Banco Sol and others could take deposits. And so basically, Banco Sol had been doing very well as a nonprofit, but it took off and could reach much greater scale and have much greater impact. So we, Accion, went back to all those nonprofits that we had created and recreated them as for-profits and brought in capital. And so we became an early equity investor in and then helped to build some of the truly great microfinance institutions, first in Latin America and then around the world. We helped to build, in addition to Banco Sol in Bolivia, Mi Banco in Peru, Compartamos in Mexico, and then we expanded through 10 countries in Africa, India, China, the Philippines, most recently Myanmar, and we even have some toes on the ground in Cuba to see if and when the regulations change. So we've really become a global player all around this vision of trying to create a financially inclusive world.
Right, right. Okay, so I want to just sort of tease that out a little bit because when we were chatting before we hit record here, and I often find it hard to visualize or to sort of conceptualize everything that you guys do because you have multiple different divisions and there seems to be crossover in multiple countries, and so maybe if you could take us through the different parts of your organization.
Absolutely. So the first part I'll start with is called Accion Venture Labs. We, over the last, I described the history of starting in microfinance, but really over the last decade or so, like everyone else, the fintech revolution has truly transformed almost every aspect of our lives and certainly has transformed every aspect of financial services. And we're living in this incredible golden age of innovation. And it has profound impact, or has potentially profound impact, in how we can meet the financial needs of the poor, because all of a sudden data analytics, mobile phones, the Internet of Things, blockchain, machine-to-machine technology, all of them have the ability to completely change how we meet the financial needs of people who have up till now been left out. Distances that used to be seen as insurmountable, now there is no distance in the world that is insurmountable.
Mm-hmm.
Transaction sizes that used to be seen as too small to be commercially viable, today there is no transaction size that is too small to be commercially viable. And data analytics is allowing us to see people who used to be completely invisible. You need to know your customer in order to lend to them appropriately. Data is allowing us to see people and small mom and pop businesses who used to be invisible. So it's a very exciting time in this space. So we are now probably the leading fintech venture capital investor for inclusion. We venture lab seed level, and we probably have the largest portfolio in the world of seed investments for inclusion. And it's a very, very exciting time. And I'll describe some of those. I'll come back and describe some of the trends that we're seeing in our portfolio. But the second part of our work is at the early and growth stage. We were investing on our own balance sheet, but now we've created the world's first global fintech fund for the underserved. It's called the Accion Frontier Inclusion Fund, and it's managed by Quona Capital. And this is the early and growth stage, so it's much larger initial investments and, of course, much larger follow-ons. And we've been thrilled by the support we've gotten from blue-chip investors. And it's a $140 million fund that is now very far along, and we're beginning to think about a second fund. And again, it's all based on this thesis of you can have an enormous social impact and great financial returns, and you don't have to trade those off. I should say, the world of impact investing, if you're focused on water or education or the environment, there may be real trade-offs between impact and returns. But I believe, and it's our experience, in the world of financial inclusion, there are no trade-offs. The companies that we're partnering with, the companies that we're seeing, the companies that we're investing in, they're early-stage companies. They have great risks. But if they succeed, they're going to have tremendous social impact and great returns. And so that's what we're trying to show. We've shown that in microfinance. We're trying to show that in the fintech world. And that's how we're going to, if this fund is successful in that respect, that's how you draw capital into this part of the market. And that is how you will change the world for billions of people, if you can harness the capital markets. When you're talking about something as big as 3 billion people being excluded, the way to deal with that is to harness something as big as the capital markets. Right. That's our challenge. All the philanthropy in the world is insufficient to the task of creating a financially inclusive world. There's a good part of our work that requires philanthropic subsidies. We are a nonprofit, but our goal is to create and find and support institutions that will get to scale and sustainability and profitability that will meet the needs of the poor. So just to round it out, we also have a very extensive portfolio of regulated, licensed, deposit-taking institutions around the world, banks and microfinance institutions, again, serving the base of the pyramid. And we also run a group of advisors called the Global Advisory Solutions, which is very much like Bain and McKinsey type consultants that go into financial institutions to help them specifically figure out how to harness technology to focus on the 3 billion people who have been excluded. That's our specialty. And the last thing I'll mention is our Center for Financial Inclusion, which is, we sponsored it, but it's really become an industry-wide think tank on policy issues around financial inclusion. The Center for Financial Inclusion also has created the SMART campaign, which is the world's first global consumer protection campaign for the poor, which is now the industry standard for consumer protection at the base of the pyramid. And CFI also puts out a steady stream of really high-quality research on the cutting-edge issues, what are the challenges and what are the solutions to the obstacles that face us on our path to creating a financially inclusive world. So that's a lot. I'm happy to talk about any of that in more depth, but that sort of gives you the lay of the land of what we're trying to do and how it all fits together.
Right. And what I'll do is, you shared with me a few slides that sort of graphically display this, particularly where the regions are and some of the names. So I will share that in the show notes for everybody who can. It's easier when you can actually see a graphic of how of the different companies and the different regions and the different parts of Accion. So I will share that. Okay, so I want to maybe just take a step back and I feel like you said there's 3 billion people who are still excluded. I know that the World Bank does their global Findex report, which I know CFI, your Center for Financial Inclusion, had some commentary on. But I want to get your take on, you've been doing this job since 2009. The Findex database has been around, I think, since 2011. So you've seen, in the last 8-9 years, there's been a lot of developments in fintech. I mean, fintech wasn't a term in 2009, and now it's a really thriving industry. So how have you seen the state of financial inclusion develop over the last 8 or 9 years since you've been in charge of Accion?
So let me start with the Findex, because the Findex really, this is the World Bank and the Gates Foundation every 3 years now publishes the most definitive source of data on it's the report card for all of us who are in this movement, and it's a great wealth of resources. And in the first Findex in 2011, they said that 2.5 billion people were completely excluded. In 2014, that number was 2 billion. And now in 2017, that number has been reduced to 1.7 billion, and that's completely excluded, zero access to financial. So we're making some progress, although that pace of progress is slowing. When I talk about 3 billion, I'm not only talking about the people that are unserved, I'm also talking about the people who are underserved and poorly served, and just inadequately served. And so when you really look at the problem, size of the problem, it's more like 3 billion. But the Findex said that 1.7 billion have zero connection to the financial system. So we're seeing progress in that more and more people are getting access, but the pace of that progress has slowed in the last 3 years compared to the 3 years prior to that. But much more troubling is we've seen the growth of inactive accounts, dormant accounts, and that raises a flag and says, are the products that we're providing, are they actually useful to people, and are they helpful to people? Because in many cases, what does a dormant account mean to someone at the base of the pyramid? It largely means that the government paid you some sort of welfare benefit or agricultural subsidy through an account, and you took it out in cash, and you never went back to that account. So you don't even know that you have an account. So that account means nothing to you because you took the cash out and you're living in a cash world. That is not the progress that we're looking for. We're really looking for people, again, go back to what all of us on this podcast may take for granted. Your financial life is way more complex than that, and living in the cash world really hurts you. If you live in a cash world, you are never developing a credit history. If you make regular payments in cash, it doesn't count. You need a digital trail to develop a credit history and become more creditworthy. So the other thing that was very troubling in the Findex is if you look in the aggregate data, savings all around the world, but especially in the emerging markets, was decreasing over the last 3 years. People are saving less, and especially in China, which I'd like to understand more, but the Chinese rate of savings, and it used to be extraordinarily high, but it has now come down significantly. Plus, credit, borrowing, is also largely flat across the world. And probably the most disturbing part of the Findex is something that they call resilience. The question is, can you, in an emergency, come up with about 1 month's income? In a crisis, can you come up with 1 month's income? And fewer people said yes to that in the last 3 years than in the 3 years prior to that. So think about what that means. People are less resilient today than they were 3 years ago. So as much as we're making progress with digital technologies and we're opening up accounts, even if some of them are not being used, the truth is people living in emerging markets are less resilient today than they were before. And if there's a single measure for what we're trying to do, we're trying to make people more resilient. So I found the Findex to be very, very troubling. And therefore, our work is more urgent than it ever was. We need to develop the products and services that are truly useful and truly beneficial to our target markets. And that's what we're trying to do, again, through fintech and through institutions that are serving this portion of the market.
Right. That's really interesting because I feel like, as you say, you can't force someone to use a digital account if there's got to be a real benefit for them to go back and keep it. So I want to just maybe talk a little bit about the move to mobile. We've seen the movement in Kenya where with the growth of M-Pesa and what not necessarily even on smartphones, but I was talking to someone at the United Nations Secretary General's office the other day, and he was talking about the potential of a $20 smartphone. So that's a phone that can browse the web and do probably not as fully featured as an iPhone, but something that is more than just a feature phone that has been really popular throughout the world, and that potential being a game changer. While $20 is still a lot for a big chunk of the world, it is much more affordable than any of the other smartphones that have been around. So I wanted to sort of get your sense on. Is that something that is really going to move the needle in your opinion, or how, like eventually, I don't know whether it's going to be 10 years, but we're going to have the vast majority, 90+% of adults in the world are going to have access to a phone, probably a smartphone, if you take out 10 years. So what's that going to do, and how do you think about inclusion when you think about the mobile technology?
It's a great question, and you're absolutely right. The single biggest change in the last decade has been the adoption of cell phones. And you're right, the trend to watch is increasingly that's smartphones. When I talk about 3 billion people, something like 80% of them today now have cell phones. So that's very, very powerful. Mm-hmm. And over time, as we see with $20 smartphones, we're seeing the rates of adoption of smartphones increase. So it's not just mobile phones, but it's internet access and generally connectivity. And then it's the data that is produced by all that, because that really allows us to understand our clients and their needs so much better than before. And so if you look across our work, across our portfolios, we're seeing spectacular innovation in harnessing mobile phones and data to meet the financial needs of the poor. It's a very, very exciting time. We're seeing companies that are using the data from mobile phones to assess your creditworthiness. Mm-hmm. Basically, how you use your phone can determine if you're more likely or not to repay a loan. And I was with one of the CEOs of one of our companies, and I said, how much do you know about me based on how I used my prepaid cell phone? If that's the only source of information, how much do you know about me? And the answer is, we can know a lot about you. If you have an average monthly spend on your cell phone and you top up a lot relative to that, that's very, very different than if you top up a little bit. If you top up on the same day every month, it's completely different than if you top up randomly.
Mm-hmm.
If you let your cell phone run out of money and you have a gap in service, it's completely different than if you always top up your phone before you run out. If you regularly use a dozen cell phone towers, it's different than if you regularly use 3 cell phone towers. If you regularly call a dozen people, it's completely different than if you regularly call 3 people. And all of that data is available, and on that you can build algorithms, and you can say, okay, I'm going to make this loan, or I'm not going to make this loan, or I'm going to make this loan at this rate. And so that's very, very exciting. And I should also add that the same technology is also working for small mom-and-pop shops, which have also been invisible and hard to lend to. If a small mom-and-pop shop, which is the bulk of the world in terms of entrepreneurship, if you can get a small mom-and-pop shop to move from cash to digital, you can start to see the flows in and out of that shop, mm-hmm. and then you can see if that shop is creditworthy. That is really, really exciting. And then there are now companies, and we have many in our portfolio, that are doing just that, and they can lend faster, better, cheaper, safer than banks. And banks really haven't touched this part of the market. So it's a very innovative time.
Right. No, I have had several companies actually in your portfolio and others who are directly trying to solve this problem, particularly when it comes to lending. There's tremendous innovation, I think, happening throughout the world for that matter. And I know that I also had Gina Harman on from Accion. I know that it's not. I don't think you actually own that business, but it's Accion in the US, and it's focusing on some of the small US micro businesses that need capital, and that was fascinating to see, because I feel like this problem we like you're focusing on the globe, but I feel like in the US we have our own challenges as well, and clearly there's a lot of people who are
no question
underserved here in this country.
I mean, half of working Americans live paycheck to paycheck and also struggle to get, a few $100s in the course of an emergency. The number of unbanked and underbanked people, especially immigrants, homemakers, students, and the poor, really, it's hard to understand in the United States, but there are tens of millions of people who are left out and poorly served by the financial system. And Gina runs the Accion network in the United States, which is the largest microfinance network in the United States. And it is different because it's all run by, it's a nonprofit network. So everything else that I've described are for-profit companies where we have equity investments and partnerships with, but our structure in the U.S., for a variety of reasons, is a nonprofit structure. But the needs are enormous.
Okay. I want to get to the crux of the matter if we can. We're running out of time, but I want to get to when you're traveling around the world, and I know you speak with governments and foundations having operations all over the world, and and private sector companies obviously as well. So what are some of the key things that governments really, I think, are the key in many ways. But what are some of the things that the governments and the private sector can do to bring more people into the financial system?
The government, let me take those each one at a time. The role of government is enormously important, especially when you're talking about financial tools, because it's a highly regulated area. We, through our Center for Financial Inclusion, partner with the Economist Intelligence Unit. Every 2 years we do a ranking of governments around the world and how they regulate this area of financial inclusion. And we name and shame, and we say who's the best and who's not the best. And more importantly, it's a blueprint to say, what do you need to do to improve how you regulate financial inclusion? And it's really a powerful mirror of what's going on around the world. But this may be obvious, but the single most important thing that a government can do around financial inclusion is have a financial inclusion plan. That seems so obvious, but it really makes a difference. The second you say as a country that we're going to have a plan, all of a sudden people start thinking about it. All of a sudden people start rallying around it. There's usually a lot of thought that goes into it. And so we've seen now more than 100 countries have adopted national financial inclusion plans. And it's hard to think of this in the United States because we don't really talk that much about it, but almost all of the developing world has cabinet-level ministers whose job is solely financial inclusion. So that's one thing. But also national IDs, credit bureaus are all important things that governments can mandate, and the government itself is a source of payments, whether government to G2P, government to person payments, whether they're social welfare payments or agricultural subsidies. If governments say we're going to pay all those digitally, that helps to build the rails that many of the companies we're investing in are going to ride on. That's sort of the railroads and the infrastructure of digital payments, and the governments can be big actors in doing that. We're also seeing some experimentation where it's become a trend to have regulatory sandboxes to work with some of these fintech companies to come up with new ways. And I was recently in Mozambique, and I visited the Mozambique regulator who's really actively trying to improve the regulation and experiment. And it's not that easy for regulators to experiment, so I applaud that when we see it. Mm-hmm. The last thing I'll mention on the role of government, just as another idea, is several Latin American countries, Mexico, Chile, Brazil, and Peru, have recently, in the last 2 or 3 years, required digital receipts and digital invoices for every company, including those small mom-and-pop shops. And the goal of the governments, obviously, is to increase tax collection and try to formalize these large informal sectors and get people to pay their taxes. But that digital trail is a huge source of data. And we have companies, one of the great companies in our portfolio is called Confio, and it's in Mexico. And it uses this and many other sources of data, but it uses this source of data to assess the creditworthiness of small mom-and-pop shops. And so, again, it can lend faster and more cheaply. And we're seeing models like that around the world. So there's much that government can do.
Mm-hmm, mm-hmm. Okay, so finally, before I let you go, you've got a lot of initiatives here. You've talked about a range of different things. But what are you working on right now that you're most excited about?
Oh, well, generally, I do think fintech is it's interesting. I don't know what it was like to run an organization like Accion, 15 years ago, and I won't know what it's like 15 years from now. Back then, it was all microfinance. And who knows, maybe 15 years from now, it'll all sort itself out and we'll say this works and this doesn't work. But right now, we're living in this incredible time where we don't know what's going to work and what's not going to work. And we, as a nonprofit, but as a nonprofit impact investor, we're willing to invest early and experiment. And, there are many companies in our portfolios, and some of them may stumble, some of them may have challenges, they're early stage, but some of them I think could really change the world. So I think we're just living in a very, very exciting period right now, and Accion to some degree is sort of perfectly suited to the moment where we have decades of history working with the base of the pyramid. We have a decade of real involvement in the fintech world, and we're set up in a way to invest early and take chances that otherwise wouldn't. The other thing that's really exciting about this period right now is I speak to a lot of business schools, and it feels like a third of the graduating students in business school today want to be social entrepreneurs. Now, that's a phrase that didn't exist when I went to school, mm-hmm. And that is so exciting. What does that mean? They want to make the world a better place, but they want to do it in a commercial manner. They want to do it in a way that can be scalable, sustainable, and profitable. And really, everything that we do is all about social entrepreneurship. And so I'm very optimistic that the future looks bright. There's many things I can point to where things are not so great today, but the future looks bright because I think people are coming out of business school saying, how can we harness business and harness the capital markets to make the world a better place? And that gives me a great hope for the future.
Well, that's a good place to end it on then. I really appreciate you coming on the show today, Michael.
It is my great pleasure.
Okay.
Happy to do it.
Thanks a lot.
Great.
See ya.
Take care. Thanks.
Bye. As Michael said, I think that all the philanthropy in the world is not going to solve the financial inclusion challenge. It's really going to have to come from the for-profit sector. We're seeing that today. There's some great companies that are making money, that are solving big problems around the world. And I think that's why it's so exciting today. I think we have access to data that we've never had before. We have access to computing power and artificial intelligence that we've never had before, bringing all this together, and we can solve big problems. And I think, as Michael said, it's a very exciting time to be in this industry. And I think we're going to see some serious inroads to really bringing the world into the financial system coming up here over the next decade. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Wonder Capital. What if you could help businesses across the US go solar while earning up to 7.5% annually? Since 2015, individuals have invested tens of millions of dollars using Wonder Capital's solar investment platform. These individuals have helped to finance nearly 200 large-scale solar energy projects across the US. Alongside individual investors, Wonder also works with financial institutions like a prominent Wall Street hedge fund that recently invested over $100 million with Wonder. If you're interested in helping businesses go solar while earning up to 7.5% annually, go to wondercapital.com/lendacademy. Wonder Capital, where impact investing meets capitalism.